Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we help you understand all the latest trends of the stock markets halfway through the trade. There is still softness in the markets right here. If you look at the Sensex levels, it's down by about 100 points, 61,068. That's the level at which the Sensex is trading at. 18,172, the current level for the Nifty. That's also down by about 25 odd points. There's just about a 1/10 or a 2/10% lower trade that you can actually see on the benchmarks. Mixed trade on the broader markets as well. Absolutely flat. In fact, when you talk about the small caps, they're trading just about 0.1% higher, 0.01% uptick for the mid caps. Absolutely flat right there. The India VIX levels also trading flat about 14.6 odd levels. In terms of the advanced decline ratio, you can clearly see there's a slight tilt towards the declines as far as the Nifty 50 stocks are concerned. 28 declines to 22 advances at this point in time. In terms of the sectoral performance, you do have a mixed review right there too. So you have FMCG that's down in trade, the metals that are seeing profits being taken off the table, realty space slightly down in trade, and the auto space really dragging a little bit more, 0.6% down for that one. But the banks are flat at this point, slightly with a positive bias. The pharma is inching up higher. The IT stocks are in fact better in flavor today. 0.5% of an uptick can actually be seen for that one. In terms of the top gainers, you do have some life insurance names like HDFC Life, SBI Life up in the green, about 1.5 to 5% odd. TCS also inching higher by 1.3% odd, and Axis Bank, IndusInd Bank from the private banking leaders space that are also among the top gainers list. On the downside, you have slight profit booking on Reliance Industries, 1% down in trade, 25.50, and that's despite the positive brokerage houses reports that we've got today in the morning with targets of 3,200 and thereabouts for that one too. Maruti is down in trade with the news flow of production cuts, in the month of December and Jan. So L&T, Britannia, ONGC, the other laggards at this point. But time now to introduce our guest to you. We have a very special guest joining in on the show. Amisha Vora joins in. She's the chairperson and managing director at Prabhudas Lilladher Group. Welcome, ma'am, and thank you so much for taking out the time on this New Year special with us on Business Today TV. Many congratulations to you on the new position at the group, and here's wishing you a fantastic year ahead. How do you really see 2023 now as we start this new year on a slightly positive, optimistic note, but we do not know what is in store for us?
Thank you, Sakshi. Wish you also and your entire team a very happy 2023, prosperous too, and to all the viewers. Come to market, Sakshi, we, I think, had a very pride moment last year when both as an economy and markets, we outperformed the entire, most of the large economies globally. And I think that trend being set will continue. The outperformance of Indian markets, I think, will continue. But
Okay.
from the market perspective, my view is that 2023 will be a story of two halves. The first half will still continue to have the burden of interest rate, recessionary fears, uh, Russia-Ukraine war and its after effect. And sometime in the middle of the year that we will have to review on some of these parameters. Where do we stand? Are the central banks taking a pivot? And then we need to reshape our investment strategy.
Right, absolutely. But will it turn out to be better than 2022 for the retail investors? We've seen how the FIIs, posted a record outflow this year. It was the retail investors, the domestic institutional investors that continued to keep focus in the Indian markets despite the overall macroeconomic uncertainty and the roller coaster ride that we've seen throughout the year as well. So for retail investors, the first time investors who entered the fray in the last 2 to 3 years, do you really expect this to be a rewarding year? And where do you see the targets?
So from the Nifty target perspective, I think the range will be narrow and with a little downside volatility more than upside volatility. But it will be a range bound market. You can say that, the best case outcome is 17,500 to say 19,500 kind of a range. And in case we meet with any mishap globally, we can probably go down 17,500 levels also. Not a crash. But whenever the markets are range bound, it is generally a stock picker's delight. And there are certain sectors, themes, or stocks that will hugely outperform the market on a yearly basis. So that is how I think the year will pan out.
Right. So, which are the sectors that you're going to be more bullish on in 2023? Which sectors give you the confidence that despite the overall still uncertainty that we may have because of the recessionary fears and the economic slowdown, the rate trajectory as well, the rate hike trajectory as well, there are some sectors that are bound to do very well and perhaps create alpha for investors?
Certainly. So I think, I go by the basics, and that is markets chases growth. And wherever in terms of growth we see stronger visibility is where the markets and the money will align. Within that, I think last year, second half onwards, we started showing a lot of traction building into defense stocks. And I think defense as a segment will continue to do very well because we still see a lot of orders coming in. At the same time, the execution of orders will gradually, second half onwards, start seeing into a lot of numbers in the companies. So that is one segment which is not very hugely owned, but traction is building, and traction is not building for 1 quarter, 2 quarter, or 1 year. This is going to be a trend for next 4 to 5 years. And as more and more investors, mutual funds start positioning their portfolios, I think defense as a segment will continue to do very well. And the second, with the defense also is a part of manufacturing. It is all under the overarching theme of manufacturing, whether it is defense, because I thought that they are neither interest rate sensitive nor
Yeah.
they are, and they are totally recession proof. So that's how I thought defense to start with. But within that also, infrastructure, whether railway stocks, whether other infrastructure stocks, other manufacturing where uh, the consumables are used, like carborundum universals and things like that. And we just keep going into the manufacturing segment, and we think that PLI is helping India over and above the Europe plus one. So all in all, I still think that the manufacturing as a broader theme will continue to be the overweight within most of the portfolios.
Okay. Ma'am, we also saw that many PMS funds really reduced exposure to the export-oriented sectors like IT and pharma, for example, in 2022. Would these sectors still remain out of flavor for 2023?
So I think in both the sectors, two things have happened. The derating has happened. At the same time, underweight portfolios have gone underweight. So I see that they will prove in the current year, along with these two sectors, the oil marketing company as a very defensive play, and there has to be some place for these sectors in the portfolio to cushion against the downside. So I think that IT, a good amount of correction has happened. We cannot be uh, totally negligent of that. I don't think it is an overweight sector, but at the same time, a reasonable weight in the portfolio is a must.
Right. And what about the star outperformers, the PSU banks, the banks? Do you see the rally continuing in 2023, or should one really take the profits off and this is it and the Cinderella moment will soon come?
Now, in my personal belief, the rally will continue. Because I think, most of these PSU banks in their last 10 years, as they were, going off their glory, had a huge chunk of non-performing assets or written off assets. And the way economy is shaping up, they've got time to start recovering something out of this bucket. But that something itself will be huge, which can set off any further the normal delinquencies in the business. And as the credit cost or provisioning requirement keeps coming down, I think these stocks have more leg to grow than what they are currently. So whether it is Bank of Baroda, whether it is PNB, apart from, of course, SBI, because SBI we always considered along and at par in terms of key investments within banking, whether it is ICICI Bank or HDFC Bank. We always used to keep SBI in that category.
Okay. And how do you also view the new age technology space, the fintechs, for example? These stocks really got hammered in 2022. The kind of wealth destruction that we've seen, most of the investors who had got the allotment are feeling now a little stuck with these stocks. Will 2023 be better for some or all of them? But still, a lot of problems are still taking place. Zomato, for example, is still marred by the top level exits. We've also seen today as well, one of the top level exits of the co-founder Gunjan Patidar. He's also resigned here. For Paytm, there is still a confusion about the buybacks, for example. The investors are pretty confused about how to really view these stocks from now as well, despite the overall correction of 40-50 odd percent. Looking at the valuations, are they looking better off or not? So how would you really view the entire space?
See, I think two things go in favor. One is that the extreme bubble which was there in their valuations is behind. Most of them have corrected 60-70%. At the same time, the managements know that the unrestricted supply of capital is not going to be there. So more sharper focus is coming into business model. There will be few who, when the capital was available, have created very niche models. The growth will come down, but profitability will start improving. So I think at this juncture, the stock prices are more or less reflecting the long-term value. Whether they will start moving up in a hurry, I don't think so. Investors would like to see 2 to 3 quarters when these business models are changing and turning profitable. But
Right.
from value perspective, I think most of the value seems to be have built.
Okay. How do you view LIC now that we've also seen Kotak initiate a coverage with a fair value of 1,000 rupees? Is that a stock that investors can now look at positively at all?
I would definitely think so because the size of the market share and the market itself both are very attractive. And it always takes time for a behemoth like LIC to align themselves to market. But this is a very, very valuable investments of government of India. And the segment is absolutely growing. It's not as risky as bank where you lend. It's not as risky as a commodity company. It's a very steady and growing uh, segment. So I think that yes, at this juncture, one should definitely look at it.
Okay. Ma'am, if I ask you, say for example, a lot of retail investors would be having some amount of money to invest in 2023. Say if they have about 10 lakh rupees to invest in this year, how would you really advise them to create a portfolio?
So I would say that this year they need to put maybe uh, 50 to 60% first in large cap, and the balance 40% into mid stroke small cap. Within large cap, they should continue to hold, as what we said, manufacturing, banking, very select auto, but also FMCG. So instead of consumer durables, we are saying FMCG, that is stocks like Hindustan Lever. Instead of NBFC, we are saying banks, stocks like HDFC Bank in private sector, where we are more comfortable. And as what I said, manufacturing, which is to start with stocks like Siemens. And in infra, one can look at Larsen. So large cap basket, and we recommend a lot the Ashok Leyland, stocks like HPCL. I'm sure there are more, but these are at the top of my mind. And then they should bucket within their mid caps some of the themes which are playing out in India as the India per capita is, unlocking. So take a smaller theme of, say, hospitals, take a smaller theme of defense, QSR, that is quick service restaurants, these and building material suppliers, the EV related auto ancillary. So some of these, players who have a larger market share, if within mid caps they choose that, I think that will serve them really well.
Right. And in the end, if you could share some of the top 3 to 5 stock picks that you have shared with all the investors and your clients as well for 2023.
Certainly, is what I was been naming a few things like HDFC Bank. We think that because of the merger, the stock has slightly derated. But as by middle of the year we go ahead with their MSCI rebalancing and reweight, the stock should definitely outperform, and management will get also time to garner the required deposits and transition. So I think this is the stock which should do really well this year. We also like, as what I said, within large cap for this year, levers where we think demand will be more protected, the growth, plus there will be a tailwind of commodity pressures coming down, so margin expansion. So one can definitely look at that. And we can go ahead into mid caps where there are certain themes and stocks that we uh, like as what we say, we like hotel also as a team, as a theme. We like hospitals. In hotels, we like Chalet Hotel, Lemon Tree. In hospitals, we like Max and Apollo, Max and Kim's. We like quick service, Westlife. In building materials, we like Kajaria and APL Apollo. So these are some of the larger themes that we are playing in the current year. I must tell you one thing this year for all the investors, that equity is one part. This is the year when they have to diversify their portfolio,
Yeah.
because if interest rates peak out, the bond side also will give a slightly more return. At the same time, our in-house view is that gold also should give very good return this year. So I would very strongly recommend diversifying their asset classes
Right.
uh, and investments.
All right. Well, on that note, thank you so much, Ms. Vora, for being with us on this special edition of New Year's. And here's wishing you, the entire team, and your family and loved ones a great New Year ahead, and may it be a very healthy and a profitable one for all of you. Many thanks for joining us on this edition.
Thank you so much.
All right, and let's get back to the markets then, and then see how the markets are trading at this point in time. Still about 85 points down for the Sensex, 23 points of a cut for the Nifty right here, 18,172 at the current level. Still about 1/10% lower for both these indices. A softer trading session after the gains that we saw yesterday. But we'll see whether, last 2.5 hours of trade has a swing that we can really expect on the upside. We have seen in the last 2 or 3 odd weeks, the 2:33 p.m. factor that really changes the mood for the markets as well. So we'll watch out for that too, and do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. And don't forget to stay in tune with us and engage with us on the other social media platforms like Facebook, Twitter, LinkedIn and Instagram. Many thanks for joining us on this edition.